So number 2, Lamy Limited had a deferred tax liability as at 1st May 2011 of shillings 100 million. For the purposes of preparing the financial statements for the year ended 30th April 2011, the following additional information is available. We have property, plant, and equipment has a carrying amount of 1,200 and a tax base of 1,000. Some land and buildings were revalued upwards by 50 million during the year ended 30th April 2012. So this is straightforward. We book in this asset called property, plant, and equipment. So property, plant, and equipment, let's book this in. So we have here property, plant, and equipment, PPE, right? So this PPE we have, ladies and gentlemen, here we have the carrying value. We have the carrying value. We have the carrying value, and then we have the tax base. Then we have the temporary what here? Difference. The temporary difference like that. Great. So what they have told us here is that for PPE, they have given us already, for PPE, already they have given us these things. This is a good examiner. Amesema for PPE, property, plant, and equipment, has a carrying amount of 1,200 and a tax base of 1,000. So we have 1,200, a tax base of 1,000. So then what is the temporary difference here, somebody? What is the tax? What is the temporary difference? What is the temporary difference here? Temporary difference is the difference, isn't it? Between the two, which is 200. So could you kindly tell me, will this lead to a taxable, will it lead to, is it a liability? Will it lead to a deferred tax liability or a deferred tax asset? Is it a deferred tax asset or a deferred tax liability? It is taxable, therefore it's what? It's a liability. It's a liability. So in this case, it's taxable. So this is taxable. It's taxable. Why is that the case? Because, ladies and gentlemen, you can see here that the carrying value is more than the taxable, the tax base. Meaning that today we've been paying little taxes. Today unalipa pesa kidogo, little tax. So in the future, remember it's just a temporary difference. In the future, you'll be required to pay adequate tax. You'll be required to pay tax as per. So today you can see in this case here less, you are paying less taxes. So in the future, you will be able to accelerate your tax payments. So basically it's a tax what here? Liability. So it's taxable or it's a liability, which you'll have to pay tax on. Great. Now from there, we go to the next item. The next item in A2RJ, the next item in A2RJ, the next item in A2RJ, the next item on ASEMA number 2 is, no, now, ladies and gentlemen, why am I leaving this land and buildings? You see, out of this PPE, they have come here and put isolated some one asset, some one PPE, land and buildings. When you see them doing that, first of all, the 50 million, of course, is well within the carrying amount of PPE. When they're doing this, of course, they would want us to do some computations of the deferred tax account. These some land and buildings were revalued upwards by 50 million will help us in producing the journals, will help us in producing the journals, will help us in producing the journals. Thank you very much, sir. Please, let's go to number 2. Intangible assets consisting of trade licenses being amortized over 5 years had a carrying amount of shilling 60 million. This was allowed for tax purposes in full 2 years ago. 2 years ago. So we have intangible assets, intangible assets. So for intangible assets, you must have been taught here very easily and nicely with your teacher. And your teacher told you that in most cases, so intangible assets, intangible assets, intangible assets, intangible assets. What is the carrying value given there? What is the carrying value given there? What is the carrying value given here? What is the carrying value given here? 60. What will be its tax base? What will be its tax base? 0. Why is the tax base 0 here? Thank you very much. I know it's 0. Why is the tax base 0 here? Remember what you are told by your teachers. The tax base for intangible assets is always what? 0. Except when you are told that this tax is allowed in this current year. You know, there are situations where they'll tell you that this tax has been provided for this year. It's provided for this year. Right? Now that exception, you must have seen that question in the past paper. When they tell you that the tax expense of this intangible asset is going to be provided in the year, in the current year. Lakini kama isoli ukisoma vizuri, wanakuambia that tax was provided 2 years ago. 2 years ago. The entire tax in this case here was provided many, it doesn't matter. What you're supposed to know nikichanganyikiwa. Intangible assets consisting of trade licenses being amortized over 5 years had a carrying amount of shilling 60 million. This was allowed for tax purposes in full 2 years ago. 2 years ago. So long time ago. So we have here intangible assets, not unless you're told otherwise, we're ukiweka hapa 0. Meaning straight away that the temporary difference is what here, somebody? Temporary difference, the difference here, I can see it is 60, which in this case is taxable. It's taxable. Thank you very much. It's taxable. So what have we learned? Remember, it's all about at times cramming. At times you cram. Even myself, in terms of deferred tax, I can tell you, I've crammed so many things. Because I couldn't have a straight line here, deferred tax. It's very easy, but I couldn't have a straight line. Number 3, the company has available for sale financial assets with a carrying amount of 20 million and the financial assets at fair value through profit and loss of 10 million. So we have got available for sale. So we have financial assets, we have financial assets, which in this case here are available for sale. And then we have financial assets, which have to be reclassified, through what here? Through profit and loss. The reclassification, from in this case, if there are any gains, you classify them through profit and loss. You know, there are those that you classify through OCI and others are through profit stroke loss. Wamesema hapa note number 3. The company has available for sale financial assets with a carrying amount of 20 million and the financial assets at fair value through profit. Fair value through profit and loss. Yes, it's fair value through profit and loss. Fair value through profit and loss. Fair value is kombili. Fair value through profit and loss. A big term for nothing. So could you kindly give me their carrying amounts? Could you kindly give me their carrying amounts? Their carrying amounts are given. Wanasema hapa meshkeep the 20 and then we have got 10 like that. 20 and then you have got 10 like that. Thank you so much. 20 and 10 like that. Ladies and gentlemen, here we are. 20 and 10 like that. So they're telling us here that both financial assets reported losses in for fair value of 2 million each. 2 million each. Reported losses of 2 million each. So could you then kindly give me the deferred, or rather the TB, the tax base? Could you kindly give me the tax base here? Tax base. You can see what Aisha is telling me. That mwalimu hii hata stafikiria. Because all these things, ladies and gentlemen, where they are giving us fair values, that we made losses. If we made losses for sure, then it means that the carrying value is what here is smaller. When you hear that you made losses, it means that the carrying value is smaller. So to get the tax base, you know, ukienda ukimess na vitu zako huko nje, taxman hataka kujua. Taxman atakubili hizi vitu at cost. Taxman atakubili hizi vitu at cost. At cost. So then what do we have here, somebody? This one here will be, you mark up that loss. Some things in this case is like they are going to be taxed at cost. So we have here 22, that loss. You add the loss. So 22 and what here? 12. I've got another way of knowing this. Once you tell me that there are losses, then I know that the temporary difference will be what here, somebody? Will be minus. And once I've known, I'll easily get this. But the very best way ukisikia kwamba kuna losses, just add back those losses. Most of you, I'm so sure, mtaka up at 18 and 8. 18 and 8. So are we together up to there? Are we together up to there? Of course, negative temporary differences will give rise to what here? An asset. Great. Una cram ingine. Ukisikia amekuambia, ladies and gentlemen, kwamba kuna losses hizi, where's the add back? The add back. Thank you very much. So we continue, ladies and gentlemen, very fast here, we are told. We continue very fast here. We go to the next one. So the next one, wanatuambia, in inventory, it's here. In inventory is shown at the lower of cost and the net realizable value. The cost is 800 million, while the net realizable value is 780. This is straightforward. Useless thing. Useless thing. Wakileta hii, unaigonga kabisa. So wanasema inventory woye. So unasema hapa inventory. Remember, carrying value. Carrying value, ladies and gentlemen, carrying value hapa itakuwaje? For inventory, carrying value will always be the same as what here. You take, remember IAS 2. Ngoja kidogo nikufunze IAS 2. The lower. IAS 2 nakwambia every time ukiwa na stock items, unaangalia net realizable value, which in this case here is 780, and the cost is 800. The cost is 800. So in this case, in your books, in the balance sheet, remember these are balance sheet figures. In the balance sheet, you work with the lower. So the carrying value will be what here? Somebody will be 780. Meaning that we've made a loss of how much? Yambao. We've made a loss of 20 bob. We made a loss of 20 bob. So whenever you're looking at losses, of course, the tax base, you must always add back the loss. The tax base, you will have to work with the cost of this thing. So the tax base, ladies and gentlemen, here is what here is 800. It's 800. Meaning that at the end of the day, what figures do we have here, somebody, as our temporary difference? As our temporary difference, what do we have here? Minus 20. Is that okay? Minus 20, right? Minus 20, thank you very much. Minus 20, thank you very much. Great. Now from there, if you allow me before my AFM students swallow me live, at times students want to swallow the most hardworking teacher, but we shall overcome. We shall overcome. I also understand you guys are operating under a lot of tension. A lot of tension. Yeah. Tuende mbele receivables, tumeshafanya receivables. Receivables, rahisi sana. Tuko na 6, tunaambiwa trade and the other payables are stated at 900 million after making a provision for discount of 10 million. Kuna moja nimeruka manini. Yes, note 5, receivables. Receivables had a carrying value of 500 million after making an allowance for doubtful debts of 20 and an exchange gain of 40 unrealized. Both the allowance and exchange, whatever useless here, ushapatiwa receivables carrying amount is 500. Receivables carrying amount is 500. Receivables carrying amount akanika rahisi. Unasema receivables carrying amount is 500. Wanakuambia kwamba kulikuwa na kalos. Kulikuwa na kalos kangapi? Ka 20. So aka kalos tunakafanya nini somebody? Kulikuwa na kalos going backwards to get the TB figure. Kalos tunakafanya nini? Kalos tunaka add, isn't it? Alafu any gain unafanya nini? Una subtract. Any gain una subtract. Any gain una subtract. Kwa hivyo itakuwa 500 plus 20 minus 40. 500 plus 20 minus 40. What figure are we getting there, somebody? What figure are we getting there, somebody? Tunapata 480 like that, giving us a temporary difference ya ngapi? A temporary difference ya ngapi woye? A temporary difference ya 20. Thank you very much. Wewe hata ukifikia hapa, si umepata marks mingi sana unajua? Hata ukifikia tu hapa peke yake, hey, umesonga. Wanafunzi wengi hawezi wakafanya swali ya deferred tax, hawezi wakafanya swali ya deferred tax. Unakuja hapa woye, the last one now, tunaambiwa kuna trade and other payables are stated at 900 million after making a provision for discount of 10. After making a provision for discount of 10. For discount of 10. For discount of 10. For discount of 10. So could you kindly then come here and give me the payables figure? Give me the payables figure. Give me the payables figure. Payables figure. So payables figure, what do we have here, somebody? First of all, what is the carrying amount? What is the carrying amount? What is the carrying amount? 900. 900. Now, remember, this is a liability. It's a liability. How about the TB amount? TB amount ni ngapi? TB amount 910. Now increase the liability. 910. Meaning the difference is what here, somebody? The difference. The temporary difference. Will it be positive 10 or minus 10? Pata potea. Pata potea. CV is less than the TB is less than the TB. Make arguments zako tuone. Make arguments zako tuone. Make arguments zako tuone. Wacha niambia wanafunzi wa AFM. Hi. Coming to you, right? Coming to you. Got a technical age. Great. Kidogo, kidogo. We shall overcome, right? Wanasema negative. Wewe angalieni hapa. Hii kitu usifikirie sana. Usifikirie sana. Hii kitu usifikirie sana. Sasa shida ni vile wanafunzi wakifunzwa pia wafuatangi sana maneno. Ikiwa ni liability, uliambiwa na mwalimu you take the TB minus what? Minus the carrying value. You do things the reverse. So 910 minus 900 gives me how much here, somebody? 910 minus 900 gives me what here? 10, which is what here? Which is positive now. Ikiwa ni liability, you reverse this thing. And then please come and give me the total. Give me the total here, somebody. Give me the total. Note 5. The last sentence of note number 5. Last sentence of note number 5. The last sentence of note number 5. The last sentence of note number 5. Both the allowance and the exchange gains are not allowed for tax purposes. Good question. Good question. We wish, ladies and gentlemen, we had enough time. You know, as much as we've got those general rules, right? Now there are things like when you go and realize the examiner is giving you like provisions, etc. There are those things that you need to adjust to be able to get the TB direct. There are exceptions. There are exceptions. So number one is 266. So 266, could you kindly then give me the deferred tax? Give me the deferred tax. Give me the deferred tax. Give me the deferred tax. Balance carried down. Deferred tax. So the deferred tax will be 30%. 30% of what year? Of 266 like that. Which gives me how much? Which gives me 79.8 like that. Kutoka hapo unakuja unachora your T account. So we have the deferred tax liability. Remember, these are tax liability, These are tax liability, deferred tax liability. Wamekupatia balance brought down. Wamesema balance brought down ni ngapi? 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 100. Huko mwanzo kabisa balance brought down, wamesema ni 100. Balance huku juu balance brought down, wamesema ni 100. Balance brought down, wamesema ni 100. So the balance brought down here is 100. And then now we have balance carried down. What is the balance carried down? From your deferred tax computation, it is 79.8. It is 79.8. For those of you who have got exposure over this subject, you know that this deferred tax liability is only affected by revaluations. So are you able to see your revaluations somewhere there? Are you able to see revaluation 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 somewhere there? Aki waoni. Kuna land kalikuwa revalued up na 50, Kuna revaluation ya land upward. Revaluation ya land upward ya 50. Na kuna revaluation ya financial assets downward. Losses, financial assets. Ilikuwa 2 each, which gives me 4. So kumaanisha revaluation hapa ni 46. So come here and take this straight, ladies and gentlemen, to the revaluations account. The revaluations account, 30% of this 46. How much? 30% of this 46. 30% of this 46. 30% of this 46 gives me how much? Gives me 13.8. Thank you very much. And now the balancing figure is now what goes to our current profit and loss account. Profit and loss account, the current figure inakuja ngapi somebody? Angalia 113.8, 113.8 vis-a-vis 113.8. So 113.8 minus 79.8 gives us what profit and loss? 34. I'm being told it's 34 like that. Kumbuka hapo chini wamekuambia journal entries, Wamekuambia journal entries. So how do you journalize this? Journal entries ni very easy. Ukishapata hii umeona. Kama sasa hapa nimeona kuna debit, kuna gani somebody, kuna credit. Hii transaction ya kwanza. So nimeona I'm crediting the deferred tax liability and debiting the revaluation. Debiting the revaluation with how much? 13.8, 13.8. Kishamalizana hiyo journal. Hiyo ni journal ya kwanza hii. Hii ni journal ya kwanza hiyo. Journal ya pili ni hii ya income statement. Journal ya pili ni income statement. So una debit, una credit. So you can see this is an expense. So we are debiting, not an expense actually, it's an income. So we are debiting the DTL. So we are debiting the deferred tax liability with 34. And then we credit our income statement with 34. And that is the end of that question. That is the end of that question, like that. So we shall continue what time we shall do this class, discussing what time we shall do this class tomorrow. But tentatively, it should be at 6. Otherwise, thank you very much. It has been a pleasure hosting you. Even if we have eaten a lot of your time, I believe we have gained something. I believe you have gained something. Thank you so much. Thank you so much. Thank you so much. Thank you so much. Great. A worthwhile blessings. Amen. Amen. Na mnanitetea kwa AFM jameni. Kwa AFM mnanitetea.